Hey folks, David Frost, LazyGapTrader.com. In this video, we're going to be discussing gap trading. As you know, and you know this is the way I feel, gap trading is absolutely by far the single best day trading strategy available in the markets today. In my course at LazyGapTrader.com, we teach two specific gap trading strategies. One is the morning gap trades, which we're going to take a look at today, and the second is gap fill trades. The reason why the morning gap trades is a timely discussion right now is we're right on the edge of getting into earnings season. And what that means is each and every day, many companies report their quarterly results. And when they do, a lot of times, whether they miss or beat their quote-unquote analyst expectations, a company is prone, or a stock I should say, is prone to move significantly in one direction or another after these earnings announcements. Well, what happens during earnings season is we can take advantage with the morning gap trading scenario or the morning gap trade strategy. We can take advantage of these situations where stocks are gapping large to the upside or large to the downside right at the open. What I teach in my course is how to find specific resistance levels or support levels, and I teach you how to find these levels for yourself. What that gives us is an opportunity to find the highest probability level where a stock is likely to have a price reaction in the other direction. Let's take a look specifically at what I'm referring to. So here's an email that went out to my subscribers first thing this morning. I have a service in addition to the course where I actually send my gap trades out to subscribers each and every day at about 9 o'clock in the morning, about a half hour before the market opens. Today there was only one possible gap trade. It was a quiet market. It was a quiet morning. There wasn't a lot of stocks gapping significantly in one direction or another in the pre-market activity. So we only had one high probability opportunity. So that one was Michaels, M-I-K, and you can see here I discuss gap lower. Support levels are $27.14, and I mentioned that one is higher risk, and then $26.58, and then I give a stop and profit target, which is about 25 to 30 cents. And that's a minimum profit target. Everything you're seeing here is taught in my course. I teach how to get these levels. I teach how to calculate them. I teach which stocks this works the best with. I teach exactly what you need to do in order to have all the tools available at your disposal to be successful with the gap trading strategy. So let's take a look and see exactly what happened with Michaels on the chart today. But before I do, just make note of these levels, 27.14 and 26.58. So here's Michaels today. Here's a 10-minute chart. You can see up in this zone here, the stock closed yesterday, had a closing print of $28.89. The stock opened this morning at 27.37, gapping down, and it was gapping down enough to where it qualified to come onto my radar screen as a possible gap trading opportunity. Now the 27.14 was listed as higher risk. Now here's a situation where the stock consolidated a little bit before it came into the $27.14 level. I teach in my course exactly what traders are supposed to do with this level. So I gave the 27.14 as a high risk level today, but I gave two levels. So the 27.14 didn't work, and there's a specific reason why. The stock spent too much time hovering around this level, and it gave it enough time to consolidate at that level, as you can see, and then trade lower. It consolidated right at the level, below the level, and then traded lower. But you can see the importance of this level. You can see when we pierced through it, we rallied right back to that 27.14 area. The next candle for 10 minutes, we stayed right there. The next candle for 10 minutes, or at least part of that candle, we were up above that level. And then we broke down and we consolidated and we went down to the next level. But you can see here the next level, 26.58, the low of the day was 26.54. Only by 4 pennies, and then we ended up trading higher for the remainder of the day, making a high in the last candle of the day, and from our entry point at $26.58, that represents on the second trade today, the second level, it represents a maximum gain of about 70 cents. So some of you get some of the gain, some of you get most of the gain. It's rare that you get all of the gain, but it's the maximum gain of about 70 cents. The point is, I want you to see the power of these price levels and how accurate they are. It's not going to work out 100% of the time. We have about a 75% win rate with the morning gap trading opportunities. So as you can see here, the second level was pinpoint right on, 4 cents below the level, and then that represented the low of the day, and we traded higher from that point forward. I want you to understand that I teach you how to calculate these levels. You can see the power of these price levels. If you knew how to calculate these price levels, it would give you an added advantage against everybody else trading in the market. You'll look at the market a different way than you do today after you take my course at lazygaptrader.com. Come check it out. Don't take my word for it. Thanks for tuning in, folks. I'm David Frost, lazygaptrader.com. Come check out the course. You won't be disappointed.